Hey, what's up, everybody? Hopefully, everybody had a great holiday. Thanksgiving. Just knowing that you guys can appreciate life. So it's pretty cool. Hopefully, everybody did have an amazing holiday. Okay, so what we're gonna do today, we're gonna talk about a few things actually, and I'm just trying to keep it short and simple. Do the best that I can to provide you guys with a great list for the week, and then show some good potential swing trades moving forward. So a few things happened, and there is a previous video from the buy low, sell high. So please make sure to check that out because it's going to correlate with this one specifically as well. I'm going to break down some of those tickers and just to give you guys levels as to what to look for, right? The biggest thing that everybody's asking right now is, are you bearish or are you short? Well, the answer is I wait for direction. Okay, there's no really bias that you should be having. You should really just be waiting for that direction. It doesn't matter what the world is saying. It doesn't matter what everybody else is saying on the Discords or the Twitters or whatever, or all the YouTubers that are saying everything's going to come crashing, right? None of that really matters. What really matters is that we got to be able to identify what's going to impact the market, to continue its trend. The trend technically here, we've only seen one red candle right at the top, but we've been trending up this past year. Okay, so since the whole COVID thing, the whole COVID drop, and then now we're just booming on up. I mean, it doesn't mean that we're always going to keep on continuing, to push forward. It just means that we're going to experience some pullbacks. We're going to experience some economic shift changes across the world, with the UK and then the Chinese markets and all that good stuff. So there's a lot of factors that are going to move these markets, but the overall direction is going to depend on how you can identify it and what you're going to look for. So I'm not here to tell anybody that the market is going to crash. I'm not here to tell you guys that it's going to keep on going to the moon. It's very simple. We identify supply and demand, and we take these trades either up or down. It doesn't really matter because we are option traders. If you're buying shares, then you can go ahead and start shorting stuff, right? Depends on how you find value and what you think it's going to match your account size. If you have a 1K account, you're not going to be looking at Amazon and wondering where it's going. You're going to be looking at things like at Apple, BAC, and C, things that are a lot smaller that go according to your account. So again, to answer anybody's question, if I'm bearish or short, it doesn't really matter, okay? What matters is that we identify direction and we move with that direction no matter where it goes. There are things that are moving and that can cause a direction, but it doesn't mean that that's the bias that we're in. That's not what I am looking for. We're going to keep this very clear, right? This is our first weekly candle at the top with a nice little supply that was created on the 4 hours. So I'll go down on the 4 right now, but just so you guys know, look at this. All right, these are the levels. All right, so that 46.85, sorry, 46.83, and then I'm going to use that top of that wick right there, which is like your 47. What is this? 47.14, and then you have a little support right here at 45. What is this? 45.35, and then we have another one about 45. Okay, right at that 45.03, 45.05. You have another piece right here at this 44.60 level, and then another one at this 44.40. Okay, just rounding off some numbers, and this is where I have my alerts at. The one thing I want you guys to consider is that this past week, this candle is based on low volume. Okay, it may look huge here, but it was real low, and it was a short week. So matching these two, for me, it doesn't really give me much of a reason to start shorting things or to say like, hey, we're going to start crashing down. Does it have potential to come down? Of course, anything can happen. Do we have potential to open up at 48? Yes. Okay. So again, it doesn't really matter right now. It's barely, 1:47 for me, PST time, and nothing's open. So this is why I like doing these breakdowns around these times. So it doesn't affect any bias or, somebody's going to come on your see it and say, I told you it was going to gap down, or I told you it was going to gap up, I told you it was just fake news. Who cares? All right. Follow the direction. That's all you really got to do. Okay. Technically, we have no support right here until this like 45.36, and then this 4,500 level. Okay. So if we get down here, we're going to start looking for a base to build on ES. Otherwise, we're just going to wait till market opens, futures open, and let it do its thing. Okay. So remember that there is a lot of fear in the markets right now, so it's causing a lot of volatility. And let me just show you guys the VIX. This is the fear that came in last week, basically because of that new virus thing that's happening. But then we're getting some mixed news saying that it's not really gonna affect us and it's not that much of a big deal. And then you have more news saying that it is a big deal. So who cares, all right? Sorry for anybody who's lost anybody through this situation. But I'm not putting it down in that perspective. I'm putting it down in the fact that the volatility in the market is very high. So with the volatility being high, look at I want to show you guys again. I think I've talked about this in the past. And I'm going to show you guys what I see here. Okay, look, first of all, you can't come on here and chart the VIX, okay? You can't be like, oh, we're breaking on a time frame, or this is your support. You can't do that. This is based on the fear index. So it moves on fear, okay? It doesn't move by numbers, all right? So check this out. Look at the characteristics. Nice green candle followed by a red one. Nice green candle followed by a red one. Nice green candle followed by a red one. You guys see the picture? Okay. And then now we're in the same spot again. Okay. You guys tell me what the difference here is in between all these characteristics that we have. There's really no difference. The difference now is that what we're going to look for is that the fear may be an increase, or it may just be another red candle. So it can be the increase or what the whatever news, the basically like buy the dip news, the news that says, oh, that was just the greatest dip buy that we could have had into December. So it's going to be one of the two. But just to show you, by the end of the week, if this thing is red, I guarantee you guys that everybody's going to say, I should have bought the dip. With that being said, I want to show you the tickers that I talked about in the previous video. Buy low, sell high, okay? So one of the first tickers that I have in mind is Snap at the weekly level. This thing is, chilling down here at the last support until we end up cracking down to the bottom. Do we have potential to keep on dropping? Of course we do. Not taking anything away from that. But I am definitely looking for tickers to hold throughout this whole COVID season thing. This new variant thing, whatever the heck that thing is. Who cares? I'm looking for great dip buys, great opportunities. The Black Friday sales I'm looking for here. I'm looking for things that have great risk to reward that are going to hold throughout this mess, right? First of all, think about it the way that it was in the past. What happened in the past when COVID happened? It was stay-at-home stocks, and it was social media that just ran. Social media stocks do not get hit from this COVID news. What are things that do get hit from COVID? First of all is airlines. Airlines got smacked pretty bad. So make sure you guys go check out those airlines. They did gap down. This team broke a nice demand on a weekly level and the 4-hour time frame, the daily time frame, the 1 minute, 30-second chart. It broke a great demand. So they just got hit with news. So in this case, I want to be able to look at something like Snap. Snap is actually a nice little pattern right here, building into a demand in 48 and 50. I already broke it down. I posted it in the Instagram, and I posted on a few other servers. So you guys make sure to check these out. Okay, there's no secret to these levels. Everybody's gonna either go long over 50. Somebody's gonna buy the dip around 48.50. Somebody's gonna buy it at 48. Below 48 is probably just gonna free fall, just because it's at a major level. So how it's gonna react with the markets is all going to depend. Okay, I am kind of leaning a little bullish on this one, but again, the trend is still down. The only way that I will take this long is if it holds above 50 and it doesn't react that aggressively with the market, with the news and things like that, right? So snap, look for the break over 50, or if you want to take it over the pole over 51, would be safer. You're looking for a retest of that 52. From this 52, I'm gonna take it to that 55 level right here, 54.50 to 55.80, and then I'm gonna be looking for this 56. So I'm looking for a lot of recovery on snap. I think this thing is still a great stock, still a lot of great value. And the other one is just like Twitter, okay? Twitter is the other one that's at a weekly level, just to show you guys. Again, go check out that previous video. So just here giving you guys levels. And this one, again, is very simple, right? We kind of just build a nice base right here, and we have a base here. So this is a staircase pattern right here. Let me just point it out to you guys. Right here, this is a nice little staircase pattern, and then a drop. So this becomes a staircase pattern, a drop, base, drop, base. So now we're finding that the candles are getting a little bit bigger. What that means and what that entails is that there's a lot more pressure coming in for buyers or sellers, whichever one is more notable. The more notable ones are the ones with the green candles. So there's a lot more green candles down here. So it's telling me that there's a lot more buyers involved at these levels for Twitter. This thing had a nice run to the downside. And again, we're heading into this volatile market. But again, I'm looking at social media stocks because these stocks are not going to get hit like it did in the past. So I'm just going based on price action, right? Things that the world reacts to, the way that these characteristics are when the fundamentals come out, the economy news comes out, and things like that. And I'm looking for the risk to reward again. Twitter's at a good spot. So over that 47.50, you want to look for 48, and you want to look for the retest of this at 48.50 to that 49. If you want to wait till 49, that's okay, just to get a little more confirmation. Totally up on you guys, but it's definitely at a great spot. So start keeping Twitter on the watch here. If you want to buy the dip down here, I would say buy it at 46 with your stop loss. I would do like a 30-cent stop loss maybe, because you don't want it to keep on dropping. This can literally be a drop base, and then drop again, or we can just rally back on up. So keep Twitter on your watch, please. And then the the other one that everybody has alerts on, I'm actually in a lead position for this one. And I saw that there was a lot of people on lead positions as well for PayPal. I think we have a nice base built down here. And just like I showed you guys earlier, there's actually a nice staircase pattern right here. So staircase pattern with the base. This will actually play out to either side, okay? So the alerts for the top is like your 189.60, okay? If you want to take it long, take it over 190 psychologically. The short side would be the 185, but I would technically wait for the 184 break. Why 184 break? Because it's going to cause a lot more momentum, and the momentum is just going to, drive it all the way down. And people are going to wonder, like, why is PayPal dropping down? Well, drop base. This is a technical pattern here based on supply and demand. This is a public participation phase. This is normal in the market, and when we have things like this and we start basing out, usually means that it's an accumulation phase, the slowdown, the cool off. Let indicators catch up, let investors come in and start loading up, whichever one it is, unload or load, whichever one comes first. But the break over 190 will determine if it's a bullish case. The break of that 184 level is going to determine the bearish case. Okay, so no matter how you see it, either one, that's what you look for. And then targets, I would just follow the staircase patterns, which is around your 194, the 200, and then the top of this, which is your 208. So PayPal is a great spot. And like I said, go watch the previous video on the value that we talked about PayPal. So keep PayPal on the watch, please. And Disney's the other one. Let's check out Disney. So here we see another staircase pattern, dropping down. We gap down. I am actually in a call for December 17th, I believe, the 150 calls. I'm actually red on my position. It did hit the stop loss, unfortunately, but I decided to hold it another day, only because we did have a weird week. It was a very low volume week, and it was more of a retail thing, and I just wanted to hold my position and give it that extra leeway. So it's not a big position, guys. It's just one contract, okay? Nothing too crazy that's going to affect my account in any way, shape, or form. But definitely got to make sure you manage your risk, okay? So I am more on the bullish case once we start breaking this trend line. If we can just build here Monday and Tuesday, or depending on how the market reacts, I am going to set my trail stop depending early in the morning on Monday. Tomorrow when market opens, everything's going to depend on it. So a little more bullish over the 151. So over the 151, I just want to start looking for, more volume to come into Disney and see if we can get some buyers in this area. But either way, I still think that Disney's a great company, and it's probably a position that you can start looking to buy some shares. All right, so here's another one. Here is V. This one too, look, it's almost like it's found its bottom, right? So we have this nice wick right here, this buyer wick on Friday, which is pretty awesome. So what I want to do here is I want to wait till pre-market to get some good levels, and depending on how we react. But so far, what I want to do is use this 195 and 194 as a support. So if we can just chill here for support and then use this here on the break of 198, 198.70, 198.70, I think I'll be able to go long on this just to keep it very, very simple, because I want to see a slowdown in sellers, and I want to see more of a buying pressure to step into V. V is still a great company. I don't think there's anything negative about it, other than the fact that they did lose a client, which was Amazon. So they did lose on a fundamental side, I guess, based on revenue. They will probably get hit, but either way, it's at a great spot. So keep your levels there for V. If it's not something that interests you, then don't worry about it, okay? PayPal's like the better setup. So if you're following V, make sure you follow MA as well. Look for the basic support and resistance on this as well. The 330 and then the bottom right here of 320. I think those are good spots for those, all right? So the other one is going to be SQ. I know everybody's talking about SQ, when is this thing going to pop again, and, things like that. So this one, again, it's really not that difficult to determine what we can do here, but check this out. This is what I like about SQ. I like that we have this nice trend line. I like that we're kind of just either building a flag. I mean, you can call it a flag, call it a wedge. I mean, I don't know what you want to call it, depending on how you want to view it. What it's actually doing here is that it may actually build some demand here, and this is what I like about finding the structures and the candle bodies and stuff, right? So this little piece right here, okay, so this 206.50 all the way to this 208.50 right here, if we can just build that demand, I think SQ can probably hold here, with the market sentiment and the way that the market will react. I think SQ can be at a great spot where we look for sideways action. The sideways action will entail accumulation phase at a weekly level. And this is why it's important to understand your weekly levels. Look at all these wicks down here. These are buyer wicks. If the buyers show up anywhere on SQ, it's going to be in this specific area. So it's a huge area, but that, I'm not saying to, get into some weekly contracts and start loading up. Not by no means, okay? You want to look for demand to this thing not to break any further. You want to look for this thing to hold. And once you can have like all the indicators catch up and the selling pressure to slow down in a good, healthy market, then at that point, you want to look for SQ to, break above these levels. And I would just use 215 and what is this, 216? Yeah, 215 and 216. I would look to go long on SQ. Otherwise, I would look for a nice little dip buy right here around this 207. When my stop loss around 206, give it $1 leeway depending on how much you can handle. So SQ is going to be a great spot. Again, 225 would be the retest right here, your first target. Technically, there's nothing here stopping it from reaching that level. And you guys know that SQ can run aggressively. So look out for that, okay? All right, so the next one is going to be MRNA. I know a lot of you guys are, trading this because of COVID, this whole new COVID thing. And it's a lot of hype. There's a lot of volume that came in on this on Friday. I think there was a lot of retail crew that came in and started, trading this. I saw a lot of people post, thousands of percentages or whatever, you know, but, you know, congratulations. But let's go look. This thing is at a resistance, okay? So that 353, just keep it a whole number. And then the bottom right here, this 339. So if we can break above this piece, then I would definitely agree that we would be around this level right here. Is 377 to, what is this, 394, 395, 395 right here, just this little piece, okay? Not looking for anything too crazy, but definitely if we can break this supply, okay, then I would definitely look for MRNA to hit that piece just like that. And then what's going to happen is everybody's going to look for that psychological number 400, and that's going to be your next target for MRNA. Is it impossible to reach that? Is it too high of a target? No. Why? Because everybody's going to be all eyes on me. And then, you know, it's going to be a hype play. It's going to be a movement that's just going to keep on going. Retail crew is going to be all over this thing, and just everybody in general is going to have eyes on it. So look out for this. And once we hit that 400, people are going to say we're going to come up to this 450. So there's a big potential that MRNA can move aggressively, and then, you know, get some opportunity to trade this thing. So again, only if it holds. I think if we hold this 320, why 320? Let me see. Based on these wicks right here, you see these two little wicks. These show a little buyers, and then this will be about 50% of that whole move. And then we could just hold and then just keep on breaking to the top side. So lots of attention on MRNA due to a lot of the COVID stuff, right? So make sure you look at that. All right. The other ticker is going to be ROKU. I'm really not a big fan of ROKU just because it's a dang TV and it's just TV. I mean, honestly, I don't think a TV stock should be worth, you know, $490 at all. But that's just my opinion. I'm just a regular guy who looks at charts and day trades. You know, I'm nobody special. And what I like about ROKU is that on the weekly time frame, it does have a nice little doji right here. And this thing has been selling off aggressively. And this is the awesome part, that we look for risk to reward, and ROKU is one of them. ROKU is at a great spot with a, let's check this out, with a great candle pattern. All right, so you got that doji, and then let's look at this. All right, you guys can see I already have my alerts. So look at this. We just had a nice little drop. Okay, so here's your drop after earnings. Here's your reaction after earnings, and then this is the aggressive selling, and then the continuation, and then right here it looks like it just caught some buyers on that weekly time frame. All right, the weekly level. Again, we're going to come back down and look for these levels to hold, right? So over this piece right here, just using the candle bodies, 237, and use that same candle body, 235 and 237, we're long. All right, we go here, 245, and then from that 245 we can reach all the way to this piece right there. It's, call me crazy, but it may just get that attention. So depending on what we do and how the market reacts, this is kind of like what I'm going to be looking for ROKU. Otherwise, it's still a short position, and you're going to have to wait for a good demand to step in around 225 to 230. I think that's a pretty big piece of demand that can be created, and hopefully Cathie Wood starts buying some more ROKU down at these levels. All right, so with Cathie Woods, check out the weekly time frame for ARK. You know, I have a lot of stuff right here. Let's see if I can get this off. All right, so weekly time frame again for ARK, we're kind of at this spot where it's almost a dip by opportunity, right? Just to give you guys an idea of what it looks like, and then we're going to drop down to the 4 hour. Okay, so again, if you're looking at this ARK ticker, what you want to look at is you want to look at SQ, you want to look at ROKU, Z, ZM, TDOC, U, Tesla, and a couple other stocks that Cathie Woods owns. The reason for that is because it's almost like if you're looking at the SPY, you're not only looking at the FANG stocks, but you're looking just at SPY, and in general, you're looking at the full market versus trying to trade every single ticker in that specific sector. In this case, it's the ETF, the ARK ETF, that carries the weight and the sentiment of all those tickers that are under it. So you don't have to go and trade Roku. You don't have to trade Tesla if you don't have the account for it. You can come over here and simply look at ARK and the way that it's holding and the way that all the tickers are moving. If all those tickers in this sector are having a nice green day, then for sure ARK is going to have that nice green day, because it's going to be based off the weight and the percentage, that's the sentiment as well, that's carrying this ARK movement. So what I want to do is I want to take a long position over 108 and drive it all the way to this 113.30 and then about 114.30. Basically this piece right here. So this is a drop, base drop, another base, a drop again, and we're basing out here. Like I said last time, there's a lot bigger candles here, kind of similar to that Twitter pattern that I showed you. Everything was dropping down with small candles on the little bases. And then the bigger candles are the accumulation phase, which are giving you the bigger green candles, and it's giving you a lot of buying opportunity. If you go look at all the ARK, a lot of them are at a downtrend level and they're all at support. So we can definitely see something like our position holding strong, just because it's more of a growth stocks. And now that we have this, again, this new vibrant thing going on, there can be a lot of buying for these type of stocks, you know, just based on the hype and based on the news, based on the fear that is happening. That's it. So look out for ARK to have a nice green day, or even just hold these levels. Again, if we can't hold in the market, guys, we're going to keep coming down. So any levels that I provide you guys with, these buy the dip levels with your stop losses, these do become put levels, and it's up to you guys to go search out the put targets. And don't wait for anybody else to tell you. You know, if you're going to buy the dip on a super red market, be cautious that this thing can keep dropping. Okay, be cautious that the patterns can break and continue to the downside. You know, don't sit there and say, well, you know, this was a dip buy. When should I stop out? You stop out right below. So it's either going to have a 30-cent stop loss, a 20-cent stop loss, a $1 stop loss, $2 stop loss. It's going to depend on how you can handle in an emotional basis. All right. So it's going to depend totally on you. Just know that if we have a red market, guys, and something's coming down aggressively, don't catch that falling knife if you can't handle that, especially if it's not your style. So keeping you guys informed on some of these tickers that are still downtrending like crazy and that they're finding some bases. I think Snap, Twitter, PayPal, Disney are some of the biggest ones that I will personally be watching, along with SQ, of course, for the bigger accounts. If you guys can too, check out Z, check out ZM as well. INTC is at a great spot too. So, and then again, airlines, they cracked down. So look for some momentum on those specifically. So again, guys, be cautious. We might keep dropping down just a bit. Look out for some of that news, the volatility that's going to increase. Once we start getting down here, I'm gonna consider buying the dip. How we get there, who knows? When we'll get there, who knows? If we get there, we don't know. Okay, we won't know till Monday market open, or till futures gap down or gap up, you know, super big, or whatever the case may be. So so yeah, short list for you guys. Make sure you guys check out, you know, things like Tesla. Let's see, check out Tesla. Nothing too crazy here on Tesla. So there's really no pattern for me to even look at. Amazon, again, really nothing to look at, guys. So I only gave you guys things that have good risk to reward, you know, things that make sense. So we don't start looking for every little thing, right? But either way, look for Snap, SQ, Twitter, Disney, PayPal, V, MRNA, Roku, and ARK. I think these are some of the good risk to reward plays that we can find this week, and definitely you guys can make some good profits. So let us know how you're doing, and if this is very helpful to you guys, let us know. We can continue to make more content, and definitely add in whatever tickers you guys like. Last time I said that if you guys wanted some tickers, you know, to just tag me or DM me, nobody did. If you don't know, I am Chef, and I am in many servers, and the bot does go out, a message does go out for all those servers based on these weekly tickers. So look out for those messages. So yeah, you guys have a great week, and remember, guys, the volatility, if you cannot handle it, stay out. Okay, be in and out of your positions. Don't swing for the fences. Don't go too crazy. Manage your risk properly, okay? And understand that this market has a lot of opportunity and you don't have to trade every single day, okay? Be patient, let it all come to you. Don't go too heavy on your positions. Trade stocks that are according to your account size, okay? And that's it, all right? So I'll leave you guys with that, and we'll see where we wake up on Monday. All right, guys, stay green, and I'll see you on the next one.